Brickwork Ratings presents BWR Drishtikone for March 2022. BWR Drishtikone brings you custom insights, principal views of economists, well-informed researchers and industry stalwarts. Let's see the views of Dr. M. Govinda Rao, the Chief Economic Advisor of Brickwork Ratings. Let's glance at the trends of macroeconomic indicators and the views of Brickwork Ratings. Growth estimates for FY22 are broadly in line with expectations. However, to achieve 8.9% growth, the Q4 GDP must grow by 4.8%. This looks challenging given the fact that the third wave of the pandemic has led to considerable restrictions being imposed since Jan 22. We expect the ongoing Russia-Ukraine crisis is likely to escalate international crude oil prices higher, which have been surged to record highs, building pressure on inflation. Hence, the central government may have to lower excise duties in the coming months to control inflation. India's dependence on oil imports is almost 80% of its consumption. There could be severe adverse consequences on the Indian economy on both growth and inflation front. A sharp rise in crude oil prices increases the import burden, and a reversal in the FPI flows creates financial uncertainty and weakens the rupee value. In the current situation, abundant forex reserves provides the needed cushion. With a reduction in e-way bill generation in February over January, the GST revenue collections are likely to remain below February levels in March. Now let's have a look at the sectoral indicators. BWR views that the banking sector, especially public sector banks, will be able to overcome the emerging challenges and report growth in the medium term. Due to the current war, the Indian auto industry is once again concerned about a scarcity of semiconductors which will inhibit PV supply concerns. The high vehicle ownership cost also continues to remain a concern due to rising commodity prices and fuel costs. Although the overall coal supply from Coal India has started improving currently, it is still insufficient to meet the requirement of non-power sector or CPPs. The energy may therefore require some time for further moderation. Steel prices in international markets have increased by around 10% within a fortnight, with China still struggling with internal issues on clean energy and export restrictions, and with Japan and Korea also not exporting much. India stands to be in the driving position to tap the benefit of higher global demand for steel as well as higher prices. The growth momentum is expected to continue in FY23, backed by stable recovery in the infrastructure and real estate projects in the country. However, with Russia-Ukraine conflict, the sector's output growth is expected to remain tepid in the near term. Lastly, let's have a view at the debt market indicators. The 10-year gilt bond yield is expected to rule in the current range with a 5 by 10 BPS sideways movement during March 2022. The year-on-year spike would lead to a decline in the treasury profits of the banks in Q4 FY22, besides causing depreciation in the banks and other investors' portfolios. Indian companies' ECBs continued the trend and spiked month-on-month by 109% in Jan 22 and is expected to be buoyant in the medium term on account of robust domestic economic growth. For detailed analysis and BWR views, the report is available in the research section of BWR website. If you like the content, please like, share and subscribe to Brickwork Ratings channel for more updates.